So let's start.
A very good evening to the esteemed faculty for today. CA Karan Chandwani ji from Pune, CA Harit Tariwal, Chairman Ahmedabad Branch, CA Bhishan Shah, the Vice Chairman, CA Sunil Sanghvi, the Treasurer and the Chairman for the Direct Tax Committee, senior members and my dear friends, welcome to this, in fact, second day of the Direct Tax series. Due to unavoidable circumstances, the yesterday's session was postponed, but we will let you know the next date. Welcome to this session, which is very useful to all of us, ITR Forms, and we are thankful to Karan ji for sparing his valuable time, and we look forward to see him physically at Ahmedabad branch. With this, let's start the session with ICI motto. I request all of you to place your right hand on your heart for ICI motto.
Yaesha supteshu jagrati Yaesha supteshu jagrati Kamam 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 kamamsho Pursho nirmimana Tadeva shukram Tadeva brahma Tadevamritamuchyate Tasmin lokaha shataha Sarve tadunatyati kaschanatyati kaschan Etadvaita
कपड़े क्यों उतारे?
Welcome back. I request all of you to unmute yourself so that we don't hear surprise noises. I know everyone is multitasking, but for the decorum, I request you to be careful. With this, let's start the session. I would request Chairman of Ahmedabad Branch, C. Harit Tariwal, to give opening remarks.
Thank you, Anjali. So I will quickly tell you a few important events. I think a lot of members have joined us today for a day-wise session. Since we have opened the session day-wise, and there are more than 70 decisions only for today, apart from the 300 that we already have. So I would just give them a brief of the events that are coming up. Tomorrow we have a session on tax audit report by CA Palak Pavagadi on special emphasis on clause by clause reporting, and sir is also going to cover a lot of practical aspects as we understand. On 18th, we have a taxation on accounting of shares and securities with specific focus on FNO transactions to be taken by CA Rajni Shah. On 20th, we have important judgments of income tax by Sunil Malu. Apart from this direct tax series, we have a very interesting session on 17th, that is on the investment strategy. So very well-known speaker Saurav Mukherjee is going to come. So do register for the same. We have a session on 23rd on the accounting standards applicable to non-corporate entities. Again, this is the first year in which it is applicable. Very important for us to understand that, and also SQC will be covered there. On 24th, we have a session on forensic accounting, and this time recently on 31st of August, Institute had launched the first of its kind forensic accounting and fraud investigation standards. And we are very happy to share that we are the first branch wherein we are having an overview of all the 23 standards which have been issued. So it will be a nice session to attend to get an overview of this. It will be on 24th. Also on the 24th, we are also launching our first ever women RRC, a very well designed structure. Apart from the networking, they have also covered a lot of places to visit in Dwarka. And apart from that, I think the structure that they have created is wonderful. So kudos to Anjali Ben for designing the wonderful series. All the women chartered accountants, we request you that please make the most of this opportunity. And also, if you have any women CA across the country, you can invite them. It is not only for Ahmedabad. You would want as many women CAs to participate. In the month of October, as of now, we have recently launched our direct tax RRC. Again, I would urge all of you, since I think today's session is on direct taxes, and majority of you practice in direct taxes. Let us all get together in Mumbai, ITC Maratha, and have 3 days of pure learning. As I said that the last time, me and Sunil Bhai will be personally sitting there for 3 days and learning with you. And I get a commitment from Sunil Bhai right straight away. So we'll definitely have a good enriching experience. The faculties are excellent and the topics are very relevant. So please do take part in that. The only point of doing it early is that we get the flights also at a very cheaper rate. so you can book the same at the earliest. Apart from this, if you have any other suggestions, you can get back to us anytime. Ahmedabad branch is always there to support you. Thank you so much. And I would again have a special thanks to Karan ji here. I think he was not feeling well, and I think we were not sure about this session. But thank you so much, Karan ji, for taking this session today. And for the session that got cancelled, postponed yesterday because of some unavoidable circumstances, we'll be announcing the date soon for that. Thank you so much.
Thank you, Chairman, for the important updates and guidance. The whole month of September and October is very packed with lot of activities, both on the personal front as well as on the professional front. I would request all the members to take advantage of it. So now let's begin the session. I would request CA Sunil Sangvi to take the session ahead and introduce the faculty for today, CA Karan Chandwani ji from Pune.
Anjali, I'm sorry to interrupt. I just forgot to mention one thing. This Sunday on 19th of September, we are going to have a tax audit drill. So basically, for all the CA students, all your articles, please encourage them. Entire day on tax audit, the faculties will be CA Palak Pavagadi, Mehul Thakkar sir. Then we have Bhavat Borana and also Jignesh Parikh. So entire day we have tax audit drill and physical session at branch. So do encourage your articles to take part in that.
Thank you, Chairman. So we have Sundays packed for students as well. Please pass this information to your articles and also encourage them to actively take participation in the Vikasa activities. Thank you, and I would now request CA Sunil Sangvi to take the session ahead.
Thank you, Asliman. Good evening, Chairman, C. Haritbhai Dhariwal, Vice Chairman, C. Bisan Bisa, Secretary, C. Anliman Choksi, today's faculty, Karanji Chandwani, C. Visal Mehta, my friend, and all dear participants. Very beautiful presentation is prepared by Karanji on the analysis of the ITR forms. No doubt it is a luck of the SSC whether the ITR would be filed or not on the portal, and even of us also. But let's hope that portal would be streamlined very soon. And I would like to introduce Karanji from Pune. He's a commerce graduate from Savitri Phule Pune University and associate member of the ICI. He's practicing accounting and income tax, specializing in setting up systems, designing SOPs, process engineering and enhancement. He's also engaged in finance and non-finance training for clients, along with management consultancy and customized analytical business reports. He's regular speaker at various forums, including ICI, Symbolics International University, Class 1 officers of the department, GST department, and also regular contributor for the research papers. The founder convener of the Pune North CP Study Circle of the ICI. With this brief introduction, we welcome you, Karanji, and let's have a big round of applause for the Karanji. As the chairman told, in spite of his ill health, he has agreed to take the session. Let's have a big round of applause for the sir. And the dais is yours, sir. You may start the session.
Yes, sir. Sunil, sir, am I audible? If you can just.
Yes, you're perfectly audible.
Yes, thank you. Thank you, Sunil ji, Harit Bhai, for inviting, the whole Ahmedabad branch for inviting. And let me first congratulate the number of events that I have just heard. And this is not just right now. I have been hearing from right my student days as to how fabulous events, fantastic events, Ahmedabad branch and Ahmedabad Vikas are continuously organizing, and which is appreciated all over the country. So that is the fact. So congratulations to all of you. So basically the topic for the session today is analysis of ITR forms. Let me just start with a brief background. Like ये जो situation है ये तो सभी को पता ही है, the ITR e-filing 2.0 portal, 2.0 portal, and how it has created a havoc also. At the same time, they have promised a lot of things that would be happening in the near future. So let us expect the best of the things. Basically, let me take you through the history, through the background of how IT returns have evolved over a period. So if you remember, many of you over here, I can see our senior members who are practicing since a lot of time. I would also request you to please share your inputs as and how we proceed ahead, because there are many things which I might have not done, which few of the members might have done over here. So if we can just start sharing those inputs also in between, or maybe at the end of the session when we have a Q&A sort of, so that will be helpful for all of us. So basically, if you all remember, we used to have the Saral forms, those one-pager forms, etc. in the very beginning. Then gradually the disclosure requirements started increasing, the reporting requirements started increasing, and all of these fields got incorporated in the IT returns itself. Like earlier, there were scrutinies, partial scrutinies, 100% scrutinies, which demanded various data from the clients. But as of now, from the SSEs, but as of now, if you see, there are so many fields which are already incorporated in the form itself. And as we all are aware that the government wants to simplify the IT returns to such an extent that most of the things, at least for salaried people, for small businessmen, etc., those who keep on filing GST returns also, they'll be auto-populated in the IT returns. And we just have to go through it and submit the return. Just agree to it. If there are any changes, let us make those changes and submit the return. This is how they have brought. As well as we are aware about the faceless assessments, appeals, which are introduced. So these are also in lines with all these points that we have just discussed. One more thing I would like to specify, specifically tell over here, specifically discuss is 26 AS. The brand new 26 AS, which came a couple of years ago, has included nearly each and every transaction that we as an individual, we as a businessman, whatever transactions that we are executing, each and everything has been introduced, has been put up in the 26 AS, be it the GST turnover, SFT transactions, details of taxes paid, any outstanding amount that is to be paid, any dues, any demands, each and everything has been incorporated in 26 AS. Like if you remember the initial 26 AS years before, it was just a simple form that was available. And today there are so many things which are incorporated directly in the 26 AS. So basically somewhere the loopholes which were there in the earlier years, the government is trying to fill them using the income tax return forms itself. So be it the SFT disclosures, be it the high value transactions, the 7th proviso and whatnot. As well as when we talk about the updates in the ITR forms, be it the passport details, they have introduced in the last few years, the passport details to be added. They are also trying to accumulate the data from the foreign ministries and club it into 26 A's. This can be expected in the few years to come, not maybe few years, in couple of years itself. Be it when we talk about joint property, earlier, the joint property owners, the co-owners were allowed to fill the form ITR 1 and ITR 4. Now they are not allowed to do so, and they have to go for ITR 2, so that they are required to fill in more details. So more disclosures again over there. And be it the COVID thing that we had last year, so a separate schedule was introduced. The investments, the reductions were allowed up to a period of 30th June 2020. So those were also added on. So the department is going on making a lot of changes in the forms itself. One more important thing that was there in the previous year, in the last assessment year, which was the ITR-V. Earlier, we used to file the income tax return form and we used to get the acknowledgement. And then the acknowledgement was supposed to be signed and sent to the Bangalore CPC, or we were e-verifying it. And afterwards, we used to get the final acknowledgement. Now they have bifurcated both the things, so that there is no such confusion as to is verification pending or is it verified or no. So that as far as the regulations are concerned, the regulators are concerned, banks are concerned, they also get a fair idea. And the SSE has also to be alert, has also to be staying alert for it. So there is a specific ITR-V, which is the verification form now. Once you verify it, then you can generate the ITR acknowledgement. So these were few changes that have been taking place since so many years, we can say, so many assessment years. And that is what I wanted to just highlight over here before starting. And I think so with this brief background, let us start today's discussion. I would not say session per se, because there are so many inputs which in fact the members over here who are attending this session will also be able to share. So e-filing 2.0, this is what we all are aware of. Let us not talk more about it. They have promised to make filing ITR much more easier, but that has not actually happened till now. But if you see, they have promised so many features. There will be a mobile app through which you can directly file the income tax return. There will be multiple login facility available, and so many things they have promised. Hopefully these things we may be we can say may be able to see and utilize them, take benefit of them. But yes, few things which we are still now able to see, like the moment you enter, you log in in the income tax portal, on the income tax portal, you are able to see the tax deposit amount, TDS amount, etc. Year by year bifurcations are given. At the same time, if you might have already logged in and saw that there are various charts also available, the recently filed details, taxable income, tax liability, tax deposited, TDS, etc. Everything is there. Earlier, we had to go to each and every return and go and take the figures out of there, take out the amounts, draw some comparative charts, and then explain to our clients, or maybe for our understanding also. These are few things that, yes, which are not that important, but yes, they will be helping us in some or the other way. So those are few good features which have come into picture, as well as the 26 AS. Like earlier, I remember when clients used to come to us, हमें एक एक चीज उनसे पूछनी पड़ती थी कि आपका जो भी ये फाइल है ये लेके आ जाओ, ये रिटर्न में ऐसा क्यों क्या, वैसा क्यों क्या, what are the dues that are still pending, are there any outstanding demands or any refunds due to you, so let us work on that, any appeal that has been filed against you, or etc. So many things that we had to ask them. आज अगर आप देखोगे, we just have to log on to 26 AS and you get a fair idea as to what is the picture of that particular client, individual, business, whatsoever. So we do get these lot of informations from 26 AS. And obviously GST turnover details are also there into it. We'll be talking about this in a bit detail later on. So this is what the SFT disclosures, etc., that are available as of now in the 26 AS form, in the new version of 26 AS. Coming on to the contents for today, I'll start with the important changes for AY 21-22. However, there are no such, you can say, major changes in AY 21-22, as majority of changes were introduced in the previous assessment year, in the last assessment year. But at the same time, due to the Finance Act, there were certain changes which had to come into picture. So those have been introduced in the forms so as to keep the transparency with the Act rules and the forms itself. So we'll be discussing them, and we'll then go on to the applicability in a brief from ITR 1 to 7. I'll discuss few practical issues that I myself have faced during this particular period, during last 2-3 years, which are important for us to keep a note of. Few question points that we usually ignore, but they are of a lot of importance, seeing the way the department is issuing notices nowadays. And if time permits, let us go through the ITR forms as well. So whatever changes we discuss over here, let me point it out for you in the ITR forms as well. I have marked them, I have highlighted them. So if time permits, I'll discuss. Otherwise, I'll share the files with the branch so that they can share it with all of you. So basically, the first and the major change for ITR 1, when we talk about the first income tax return form, ITR 1 and even ITR 4, is that in the cases where there is a deferment of tax on ESOPs, as per section 80 IAC, it was recently introduced that any eligible startup, as per the section, any eligible startup, if they are issuing some sort of ESOPs to their employees, in that case, the tax on these ESOPs can be deferred up till so and so period. So if you can see, the clause has been, I have put the clause over here. Within 14 days from the earliest of the following period, the tax has to be deducted and is to be paid to the government. So be it 48 months from the end of the assessment year of the relevant financial year in which the ESOPs were issued, or be it the date when the SSE or when the employee leaves the organization, ceases to be a part of the organization, or be it the date when this employee, this SSE, is selling the ESOPs to selling the shares allotted under ESOP to some other person. So from within 14 days from this period, any of the earliest period, the tax is required to be deducted. But in these cases, ITR 1 and ITR 4 cannot be filed in the immediate financial year itself from which the ESOPs are allotted. So as per the rule 12, the deferment has been taken place, and the same change has been made in ITR 1 and ITR 4. Earlier, there was no such clause. Now this particular clause has been introduced. At the same time, one more important thing is that if you're not filing ITR 1 and 4, you're not allowed to. So you'll be going for ITR 2 and 3. If you're going for ITR 2 and 3, the reporting of the amount deferred is also to be put in respect of the ESOPs. That is one important part. There is a separate separate part that has been included. I'll be showing it to you when we go through the forms under Schedule TTI, and which seeks a proper disclosure of the tax amount that has to be deferred in respect of these ESOPs. However, the ITR form does not provide any such guidelines, any such reference as to how do you calculate the tax amount which is to be deferred. But yes, there are certain guidelines which are available under rules under various sections. So we can go through them and definitely we can calculate this amount and then mention it over there. So this was one important part as far as deferment of tax in respect of ESOPs are concerned. ITR 1 and 4 are not to be filed. They are not allowed to be filed. ITR 2 and 3 you can file obviously, but in that case also the amount is to be specified over there. Moving on, one more important section, that is 194N. The section specifically says if you are withdrawing a certain amount of more than 20 lakhs throughout the year from your accounts maintained with any bank, banking institution, cooperative bank, post office, then person who is responsible to pay you this amount will deduct tax, will deduct TDS, will deduct tax at source. The threshold is 20 lakhs in case of certain types of SSEs which are not regular filers of the returns, and 1 crore in case of other people who have been filing the returns continuously. So now, in these cases, the SSE cannot file ITR 1 if the tax has been deducted. If there is a TDS deduction under section 194N, ITR 1 cannot be filed. And as per the rules, rule 12 of income tax rules, the same amendment has been made and the changes have been made to ITR form number 1. There is something else in addition to this, which is no option to carry forward the TDS, which has been deducted under 194N. Now see, ITR 1 cannot be filed. We can surely file ITR 2, 3, 4, 5, 6, 7. So usually what happens is, if we are not able to utilize the TDS, we are not able to take the credit of TDS, we usually carry forward the amount and use it in some further assessment years. But in this case, you will not be able to carry forward that amount. If you are not able to take the credit of the amount, you have to apply for the refund immediately in that same year. There are very less chances that you can apply for it later on as a condonation, etc. And since it is the first year now for this, so let us see how the things go on. But yes, apparently you will not be able to carry forward. You will not be able to take it ahead. You have to use it in the same year. Either you use it or you can claim the refund of the balance amount. Because see, basically, when we talk about the credit of TDS, TDS has been deducted against some or the other income, against some or the other head of income. But when we talk about 194N, it is not against some income. It is against certain withdrawal that the SSE is making. So therefore, you cannot carry it forward and adjust it against some other head of income later on in the next year, or you cannot adjust it against any other income in this year also. So whatever credit you are taking, you can take it. Either you take the credit or you apply for refund. So whatever excess amount is left, we can apply for refund. So again, 194N, ITR 1 is not to be filed in those cases. You can file ITR 2 to 7. And in the same case, when you file ITR 2 to 7, make sure you are keeping a note of the TDS amount deducted under section 194N. Either you use it or you have to apply for the refund of whatever balance amount is left. If you forget to apply, then you will not be able to take it forward in the next year, carry it forward in the next assessment year, or you will not be able to apply as a refund even in the next assessment year. So this was one major point again, which we need to take a note of. Moving on, as we all are aware about the dividend income, instead of dividend distribution tax, now the SSEs will be paying the tax. The individual SSEs will be paying the tax. So accordingly, the changes have been made in the ITR forms. No such logical change, you can say, or no such other kind of change, just the rule has been changed. So accordingly, the forms have taken effect. So this was one more point which I thought let us take a note of, that we'll need to ensure that in the schedule of other sources, I'll be talking about it much in detail later on also when we go through the forms. So in the other sources, we need to take a note that we specify these details. We mention these details. At the same time, let me also talk about dividend income ka bifurcation. That is quarterly breakup. See, earlier there was DDT, so there was no question of this dividend income, etc., and that too on quarterly basis. So it was totally up till the company who is distributing the dividend. But as of now, since the individual SSE is receiving the dividend income, we have to ensure that we give a breakup, quarterly breakup, so as to it is easy for the department to calculate interest, etc. on, you can say, as per the section 234C, that is default in payments of advance tax liability. And that is the reason they are asking us to mention all the amounts, mention the quarterly breakup of the dividend. So they have created those cells in the form itself, wherein from 15th of, you can say up till 15th of June, then 15th of June till September, September till December, December till March, and then last 15 days of March, we have to insert, we have to put in the amounts separately. Moving on, schedule DDT has been removed from ITR 6 since there is no DDT now. So the companies need not fill in this particular schedule. So that has been removed. Moving on to one more important thing, that is effect of marginal relief. If you might have gone through the ITR 2, 3, 5, there is a separate tab that they have inserted, a separate cell that they have inserted over there. When we are calculating surcharge, when surcharge is to be calculated, there are two different cells which are introduced. One is surcharge computed before the marginal relief, and another one is surcharge computed after the marginal relief. No doubt there are systems, they will be automatically checking it out, but still we have to specify the amount separately, just as a cross check, whether the amounts are correct, whether we are making all the calculations correctly. So this is one more new thing that has come into ITR 2, 3, and 5 as of now. Moving on to the next part. Increase in the threshold limit for tax audit. Accordingly, ITR 3 and 6 have been taken into effect. So this is the clause which we all are aware of. As per section number 44AB, the threshold limit has increased from 1 crores to 5 crores, provided that there are two conditions. Cash receipts are less than 5% or at max 5% of the total receipts, and cash payments, including all types of payments, are not more than 5% for the whole year of the gross payments. So if these two conditions are satisfied, the limit becomes 5 crores. Further, in this assessment year from 21-22, the 5 crore limit has been further increased to 10 crores. So I'm sure each one of us has discussed this point and has criticized a lot on this particular point. Many bodies have made representations for it, but the only reason that the government says that we are focusing on ease of doing business. So as it is, there are so many reconciliations taking picture automatically, directly, without any such certifications, any such audits. So let us bring some kind of relief for the small businessman. That is the only reason. So let us see how this particular thing goes and what are the loopholes that come out of it. What are the things that come out of it later on as we proceed. So this was one important change. The limit of 5 crores has been increased further to 10 crores, provided two conditions are satisfied. Condition number 1 was cash receipts should not be more than 5% of the aggregate amount, and cash payments should not be more than 5% of the aggregate cash payments made during the year. Only in those cases you can go for tax audit. You cannot, you need not go for tax audit up to 10 crore rupees. So accordingly, ITR 3 and ITR 6 have taken the changes. Accordingly, the changes are made in those. One more important point about 115 BAC and 115 BAD, the new scheme, new tax regime for individuals, HUF, and for cooperative societies also. This scheme was introduced long ago. We all are aware about that. In the last assessment year also, we may have suggested many of our clients to shift the regimes or to take the benefit of these regimes. And we are aware that there are so many deductions and exemptions which used to be available under the existing scheme. But those deductions and those exemptions will not be available if we opt for the new tax regime as per sections 115 BAC and 115 BAD. Now, there are two questions which usually came to our minds. One was, what about the unabsorbed depreciations, which we could not absorb? And what about the losses, the business losses? Will we be able to take the benefit of unabsorbed depreciation? At the same time, will we be able to take the benefit of brought forward losses of the previous years? The answer is no. You can no doubt, as per rules of income tax, as per rule 5 specifically, you can make the adjustment. You are given a separate column in the brought forward losses in the unabsorbed depreciation table in the schedule in the ITR form itself, that on the opening WDV, you can add this amount, the unabsorbed depreciation amount you can add, and you can increase it as per the rules. But you won't be able to take the benefit of unabsorbed depreciation. Not now, not even in the years to come ahead. In the same manner, the brought forward losses, business losses. So you won't be able to take the benefit of business losses. If you are able to make the adjustment as per the rules, if those are applicable to you, you can make the adjustment. Otherwise, the amount is lapsed. We won't be able to take the benefit of these amounts. So I'll just repeat again. One was unabsorbed depreciation, the point of unabsorbed depreciation, and another one was carried forward of losses. If the SSE is opted for the new tax regime, be it individuals or HUF under 115 BAC, or be it the cooperative societies under 115 BAD. So both the returns ITR 3 and ITR 5 have been accordingly taken effect. Can someone just confirm if I'm audible, because the Zoom screen is stuck at my end? Sunil bhai, are you there?
Yes, audible, sir.
Okay. Thank you. Okay, I can see a couple of questions. Let us do one thing. Maybe if I'll take a pause in between, I'll go through the questions. Otherwise, I'll go through the questions at the end during the Q&A session, so that we complete all the things basically and then move on. So the last point that we saw was relating to the unabsorbed depreciation and relating to the carry forward of business losses in case if you are opting for the new scheme. Moving on, section 80M, again a newly introduced section as per Finance Act 2020. which allows the domestic companies to take the deduction of the dividend which is received from another domestic company or foreign company or a business trust, provided we are distributing such dividend to our shareholders. If we are doing so, we can take the benefit, and accordingly the forms have been changed. So if you see Schedule 6A right now, there is ATM available in ITR 6, in which we can take this particular benefit provided we are complying with the rules. Provided we are complying with the rules. So this is another section that has been introduced, that is ATM. Moving on to the next part, this was obviously expected. So Schedule DI was introduced in the previous year for ITR Forms 1 to 6, wherein the extended due date up till right from 1st of April 2020 till 30th of June and then till 31st of July. There were certain deductions, certain investments, if made during this extended period, were still allowed to be claimed as a deduction under Income Tax Act, under Chapter 6. So obviously that was due to the COVID pandemic, and there is no such situation right now. The people are aware of it, and then people have managed to make their investments, make their expenditures accordingly. So this schedule has been removed. So if you see the new forms, if you see the new utility, you will not be able to see Schedule DI or that particular part of Schedule DI. As we discussed about 115 BAC, in the same manner, we have discussed 115 BAD also. So the new tax regime for individual NHEF and as well as for the cooperative societies. Let me tell you, as per the Finance Act 2020, in case you wish to opt for, if you wish to opt for the new tax regime and you are having income from business and profession, then you need to file Form 10IE, that is basically a declaration which will include all your details as per the tax regimes which you need to put in over there, and you will get an acknowledgement number once you file that Form 10IE. The date of filing and the acknowledgement number both have to be separately entered in the ITR 1, 2, 3, 4 as and how which you are filling in. There is a separate column given in the ITR form. You need to enter the date. You need to tick it out first, yes or no, if you have opted. If you have opted, there is a separate option given over there now, a separate question. If you have opted for it, you need to click over on yes, tick the yes box, and then it will enable the further cells for you to enter the date of filing of the declaration, that is Form 10IE. At the same time, you are required to enter the acknowledgement number of the same form. Only then you will be able to opt for the particular scheme. Please note, Form 10IE is supposed to be filed before filing the income tax return, because you have to enter the details accordingly in the income tax return itself. Same thing happens with ITR 5 in case of 115 BAD. If the cooperative societies choose for the alternative tax regime as per 115 BAD, again Form 10IF. We have seen 10IE in case of 115 BAC in case of individual and HUF. In case of section 115 BAD, that is for cooperative societies, the alternative tax regime, declaration under Form 10IF is to be filled in. It is to be filled in before the income tax return, before you file the income tax return, and you need to mention again, there is a question that is asked, if you are opting for the new taxation scheme, alternative taxation scheme, tick the yes, further cells are enabled, enter the date of filing, enter the acknowledgement number, only then you will be able to file ITR 5 successfully. So again, it has to be filed or it has to be submitted before. One small update, one small change, again coming through the Finance Act, date of cash donation in case of deduction under section 80 GGA. So it is applicable for ITR 2, 5 and 6. You can later on go through the all sections. I'll be sharing the PPT with you all. So the cash donation that we are making, the amount of cash that we are donating, it is not only the mode of donations that have been introduced in the forms. So there is a separate mode, like if it is cash, if it is other than cash, the total amount, this is how they have created different columns now in the ITR form. But in addition to that, where there is 80 GGA section is applicable, the cash donation, even the date on which you are making such donation is to be entered. So this is an additional disclosure that have come into picture. So even if the amount is as small as 2,000 rupees, we need to enter the date. On what date have we made that donation? So again, you need to maintain all the evidences properly. You need to enter the PAN, etc. Everything is to be entered properly in order to avail the deduction. At the same time, these dates, etc. will be reconciled by the system at the back end. Okay. Next, one small change. Few of us may be using ITR 5 and 6 to file file income tax returns for life insurance businesses. Earlier, if anyone has filed, you may be easily able to recollect it. There was these 4 points that were required under Schedule BP of the income tax return. That is net profit or loss from life insurance business as per section 115B. Then there were some additions and deductions as per the sections 32, 43B. And then there was the final income under, you can say, section 115B pertaining to the life insurance business. These bifurcations have been done away with, and as of now, there is only one single figure that we need to enter. So you can say the disclosure has been reduced. Next point, talking about ITRs 2, 3, 5, and 6. Section number 112A and section number 115AD. If you see both these schedules in the IT return forms, there are 2 things which have been added. Earlier, we never had actual cost of acquisition as a proper column, as a cell available. No doubt we were taking them for consideration. No doubt we were considering these 2 points, that is, the cost of acquisition shall be higher of the actual cost of acquisition or lower of fair market value or full value of consideration. That is as a result of transfer. But these particular columns have now been introduced separately in that whole schedule. So I'll be going through the forms. When I go through the forms, I'll be showing you the schedules. They have modified the table. They have entered the respective columns of actual cost of acquisition, lower of, you can see the fair market value and the full value of consideration. So even these reconciliations or the cross-checking of your calculations will be done by the department at the back end. So that particular thing has been enabled and the forms have been modified accordingly. Next, moving on to 1 or 2 last more points as far as the major changes are concerned. When we talk about ITR 3, Schedule 5A, which is basically used to apportion the income between the spouses. Now, many a times what happens is, suppose the spouse is a partner in a partnership firm and tax audit is applicable to the partnership firm, or the partnership firm is supposed to file the report under section 92E. So the due date of the return filing for the firm becomes 31st of October or 30th of November in usual cases. And the partner of the firm, that is the spouse, is also allowed to file the return up till 31st of October or 30th of November in those cases, if the firm is required to file 92E or the firm is required to submit the tax audit report. Now what happens is, if there is some apportionment that is pending as per 5A, the spouse of that partner can also, you can say, take the benefit, maintain all the records properly, and mention the requirements or mention in the ITR Form 3 that so and so was the date of audit report submission, so and so was the date of filing of return of my spouse, and then I am filing this particular return. So that is also allowed right now. So basically section 5A benefit has been given in this year, and accordingly the forms have been changed. Moving on to the next point, ATP under ITR 5, deductions available for cooperative societies. Earlier, we have never ever written, maybe some softwares have this facility of business codes, nature of business codes as far as cooperative societies are concerned or their return filing is concerned. Maybe few softwares have it, but if you see the original notified form or if you see the ITR income tax utility, you won't be able to find out that nature of business code, which was not mandatory till now. Now from this year onwards, they have made it mandatory and you have to put in the business code properly. Only after that you will be able to calculate the total income and further file your return. So ITR 5 in the cooperative societies, again, to claim the deduction under section ATP, nature of business code is mandatory. Nature of business code has been made mandatory from this particular year. Next, now talking about ITR 3, 5, and 6 in case of businesses, firms, etc., companies, where 92E is applicable, transfer pricing report is to be submitted. Earlier, it was just one question that if you are required to submit the report and have you submitted, etc. Now, if you see, there is a new question which is introduced. Was the SSC liable to obtain a transfer pricing report under 92E? Yes, I am liable to obtain. And if you are liable to obtain, have you obtained, have you submitted the report? There is a separate question. And after clicking yes, the SSC is required to furnish the date of filing of the report. So that is an additional question added from this year onwards. We have to add it over there only after that the form gets validated and then we are able to file the return. If I'm not wrong, I have seen many people who have filed both the things simultaneously, or maybe return has been filed first and 92E has been submitted later on. No doubt they have got some notices later on to which they have responded to, or they have condoned for it. But specifically after this particular case, since the date of filing is to be put in, you get hardly 24 hours to file that report back to the department. So first 92E is to be filed, enter the date of filing over here, and then the return is to be filed. That was about additional question to ensure that 92E compliance is done. So basically these were the major changes, the 10-12 things that we have discussed till now. Few things that were removed, few questions that have been added, and the important change as to 194N and deferment of Esop, that is for ITR 1 specifically, deferment of Esop, and also the amount to be inserted of the tax amount which is to be calculated and inserted from ITR 2 onwards. So these were two important changes. However, we have seen ATM, we have seen ATP, nature of business code is to be introduced. We have seen a separate, you can say, question has been entered in case of 92E submission. So these are the basic changes which have happened till now. Let me take a small pause over here and go through the chat box if there are any questions pertaining to these changes. And then let me move on to the applicability part. Okay, I am not able to see any more questions. Trishank ji, I think so. I am able to see your question, but that will be, I'll be addressing it at the end. Any inputs if any of our senior members would like to put in over here? Any inputs, any experiences, if any of the senior members or any of the members who have a certain experience or faced a certain issue, if you can just put forward or share your experiences, so maybe all of us will be able to take benefit of that. I guess Chandrasekhar ji has raised the hand. Yes, sir, please. Okay, so let me move on to the further part. So basically, let us quickly discuss the applicability of various forms. Let us have a quick view of it. We all are aware about this. There are not many changes apart from 194N and apart from deferment of tax in case of ESOPs allotted by eligible startups under 80 IAC. There are no more changes as far as applicability is concerned. But since we have a lot of time, let us quickly go through the applicability. When we talk about ITR 1 or the Sahaj form, so basically any salaried person, the first and foremost point is resident individual. So non-resident or you can say NOR, etc., they won't be able to file the return. Only resident individual is able to file ITR 1. So basically, say if the income is salary or pension income, etc. Point number 2 is to be noted on the screen, that is not owing more than one house property. So if there is one house property, it is fine. You can file ITR 1. There was some confusion in the last assessment year. The utility which came earlier, which was earlier released by the income tax department, allowed some utilities, allowed the people, some softwares also allowed the people to enter co-ownership or enter the joint house property also in ITR 1. However, they have received the notices and they had to correct it later on. So as for now, ITR 2 is to be filed. ITR 1 cannot be filed in case of joint house properties. Still now, I am sure that there are one or two softwares which still, you can say, allow doing that. Next, income from other sources. Again, yes, obviously. When we talk about who cannot file ITR 1, so foreign assets, basically, if the SSE, if the individual has foreign assets, or even if the individual has a signing authority for any account which is located outside India, any income which is coming from a source which is outside India. In case of 5A, that is apportionment between the spouses. In case of deduction under section 87, even if the individual is a director in any company, then in that case, ITR 2 with additional disclosures is mandatory. ITR 1 cannot be filed in that case also. If you have held any unlisted equity shares, again, ITR 2, right? If your total income exceeds 50 lakh rupees, in no case you will be allowed to file ITR 1. You have to give so many disclosures and proceed with the further returns. In the same manner, the DTAA benefits agricultural income limit exceeding 5,000 rupees. At the same time, if you see, if there is some income which is the TDS has been deducted from your income, but that particular income pertains to some other person, some other SSC, and that person has taken the credit and filed the return. In that case also, you are not able to file ITR 1. Moving ahead, there are 2-3 more points which we have discussed today. Point number 1 was individual in whose case payment of TDS in respect of ESOPs allotted by eligible startup under section 80 IAC. In that case, ITR 1 is not to be filed. ITR 2 along with the computation of amount of tax that you are deferring. And last one was if your tax has been deducted as per 194N, you cannot file ITR 1. Go for the further sections, further ITRs, ITR 2, 3, 4, and in that also you will not be able to take the you can say you will not be able to carry forward the tax. You will have to use it in the same year or you will have to demand a refund. Before proceeding with ITR 2, let me just talk about a few more points over here. See, in case of ITR 1, in case of ITR 2, you might have noticed in the previous year itself, in the last assessment year itself, that the number of days the individual SSC is in India is to be also entered. If you go through the form, you will see there is a separate section for the residential status. If you're a resident, for how many days. If you're a non-resident, then if you can give the tax jurisdiction or the number of the jurisdiction where you are taxed, etc. In case of house property, tenant span, those are to be entered properly. There are declarations required if it is not there. In case of 26 AS, what we usually do while filling the ITR forms of say very small clients, etc., what usually we do is we just go through 26 AS, take all the incomes, consider all the incomes, or in a few cases we may ignore 26 AS, assuming that there is no tax which has been deducted, nor the client has mentioned it, neither we have seen it somewhere. So we skip or we ignore totally 26 AS part. But dear members, believe me, we should go through 26 AS first, because you have seen the vast coverage of 26 AS right now. You can get in so many details from which may be relevant for you to file the return of that client. At the same time, not only that, but at the same time, there may be some income which is left out, which we may be able to consider only when we see 26 AS, or you can talk to your client about it. So make sure that you have a reconciliation with you if you have not taken any income, if you not consider any income which is appearing in 26 AS, but you do not wish to pay tax on it because it is not your income. So make sure you have reconciliations for it, and make sure you have the explanations and evidences ready for it, because we may get a notice at any point of time directly from the CPC that is automatically generated, because the amounts can be computed easily, right? As far as ITR 1 is concerned, passport details are not required, but one small addition has been made since the last assessment year itself, that is multiple bank accounts are allowed for refund credit. However, if you want to prefer a particular account, you can tick mark that particular account over there. As far as nature of employment is concerned, there are separate boxes now. If you're writing government, it is state government, central government, etc. There are 2-3 drop downs which have been introduced over there. And then the 7th proviso to section 139.1. Let me talk about the 7th proviso to section 139.1. We all have filed the returns last year and we have considered this particular proviso, right? But let me just have a quick recap. 7th proviso section 139.1 specifically says that if you are not supposed to file the return, but there are any high value transactions that you have incurred, that you have executed any of these 3 in the previous year, then you have to file the return in the assessment year. One of which is if the amount of deposit exceeds 1 crore rupees in one account or one or more account cumulatively throughout the year, then you have to report the actual amount of deposit. So even if apart from this, you do not have any other transactions and you're not liable to file the income tax return, but still that SSC, that individual will be required to file the return if he has incurred or he has executed transaction number 1 as per 7th proviso to section 139.1. The return form itself gives a you can say question over there that are you filing the return as per the 7th proviso of section 139.1. You take a yes, they'll enable the further 3 cells which ask you these amounts or which ask you these things. If you tick yes on any of these, you will have to report the amount, the actual amount. Second one is if the expenditure on a travel to a foreign country for yourself or for any other person. If it exceeds 2 lakh rupees, which easily exceeds in many cases, then you have to compulsorily file the return and report the amount of deposit. In spite of there is no such other income, still you have to file it. Third one is, if you have incurred more than 1 lakh rupees on electricity consumption throughout the year, then again you have to file the return as per 7th Proviso to 139(1), and you have to mention the actual amount of deposit in the return. So this is about the 7th Proviso. Okay, next, when we talk about ITR 2, that was all about ITR 1. Talking about ITR 2, ITR 2 again, an individual to whom ITR 1 is not applicable, or HUF, whose total income does not include business income. So basically anyone else is able to file the return. Who cannot file the return? A person who is not an individual or HUF will not be able to file the return. So a very, you can say, simple applicability criteria. In this case, again, those points which we have already seen in case of ITR 1 are same as it is applicable over here also. 7th Proviso to section 139(1). There is a separate question. There are 3 transactions given, high value transactions reporting. We have to tick the particular cell, you can say, and we have to mention the actual amount. As far as changes in nature of employment is concerned, that is there. If you go to schedule 112A or schedule 115AD, that is script wise details for resident and for non-resident, both the cases. As ITR 2 can be filed by non-residents as well. So in this case, 115AD schedule is also there. Individual script wise details are to be inserted. You can see that big table in the landscape form, wherein all the columns are given and we need to fill in each and every form. No doubt, even if you're not using softwares, the utility allows you to export and import the data from Excel. So even if there are hundreds of scripts that you wish to add on, you can easily add it. But make sure it is script wise details right now from the last one assessment year. Before that, earlier, prior to the assessment year 2021, there was no such provision. Only details were supposed to be added. Again, multiple accounts for refund. In case of jointly house property, joint owners, co-owners, ITR 2 is to be filed. Again, dividend income, agricultural income, again, ITR 2 is to be filed. We have seen the 7th Proviso, high value transactions. I have just now discussed about the changes in nature of employment. If you are selecting, earlier it was just private public. Now, if you see over there, it is then in it you can find government and central government, PSU, pensioners, others, etc. These have started appearing. Same thing is there for ITR 1 also. Same thing is there for ITR 2 also. One more small change in case of ITR 2, change in details of companies. So basically, where the taxpayer or the assessee who is filing the return is a director. Earlier, what is the type of company in which this person, this assessee, this individual is a director was supposed to be entered. Now they have removed such requirement. Again, this was applicable for the last assessment year also. Script wise details in case of resident, in case of non-resident, overall each and every script wise individual details are to be inserted in. I'll show you the table once we go to the forms. Multiple bank account for credits. Yes, this schedule DI has been done away with because there is no such extension given for this particular assessment year. In the last assessment, it was there. We have filed the returns accordingly. As of now, it is not applicable. Okay. Now, when we talk about ITR 1 and 2 specifically, few caution points that I usually noted down for the members so that you can keep it in your mind while filing the returns. Firstly, it is mandatory to file the returns online for all the payers, for all the taxpayers, except for those who are more than 80 years of age and did not have any business income. In those cases, we can file the returns manually, even now. So maybe there may be some people who wish to file some sort of backdated returns. This particular thing becomes a very important thing for them. Number 2, as from 1st of April 2017, now we are all used to it, but still I thought of putting it over here so that we do recollect that there is a penalty if we are not filing the return before the due date. So it varies, and the max is 10,000 rupees under section 234F. So it is very important for us to file the returns in time now. Earlier it was just tax interest if it is taxable. Now there is some penalty also. One more thing, in case of ITR 1, 2, 3 or 4, if the assessee or if the individual does not have a PAN, the assessee can file the income tax return. The individual can file the income tax return by quoting the Aadhaar number. However, as of now, we have the instant PAN facility. I think so 24 hours, 48 hours, or at max 3 or 4 days are taken to issue the PAN number. Even though the PAN card will be shipped or delivered late to you, but no doubt you'll be getting your PAN number via email and you can log in, you can create an account on the income tax portal and file your return. But still Aadhaar is still a facility that is available. So this was quite relevant for the previous 2 financial years, previous 2 assessment years, but as of now, we have the facility of instant PAN also. Then the aspect of joint house property, which I have already dealt with, that is in case you are a co-owner with someone else, then you need to go for ITR 2. ITR 1 cannot be filed. So make sure you follow it properly. Moving on to the next point, a very important point, which I would definitely say from my own experience also, as well as understanding the issues many members have faced. These softwares that we use, no doubt they are of so much benefit to us, and no doubt they give us you can say a certain amount of relief also by directly entering the data, calculating automatically, etc. But still, in many cases, I would not say in many cases, in few cases, it is quite possible that the XML file which is generated through the software, and when you upload the XML file on the portal, it accepts, but then there are some small errors that come forward, and you understand them only when you receive the notice for it, and then again we need to go back and again correct those particular errors, and then again file the revised return, etc. So I usually put this point over here, that once the XML file is ready from the software, just try to insert that XML file in the ITR utility provided by the department, validate it once. As far as the income tax amount is also concerned, I usually calculate the income tax amount separately from the utility again, just to ensure if there are no issues in our software. Because many a times when we or any of our staff or articles use the software, it can happen that the software is working absolutely fine, but there are some or the other settings which are changed for some particular purpose, and then they remain as it is. We do not revert them back. So in those cases, we may find few discrepancies in the income tax amount, however small, 5 rupees, 10 rupees, or in some small denominations, but still it happens. So this is usually a strong practice to insert the XML file in the ITR utility. Make sure you are calculating the amount, validating the utility again, and then you are submitting the file. If there are any changes, you can accordingly change it in the software also, regenerate the file, and then revalidate it, re-upload it. So that is one of the best measures. Next, verification of GST turnover and income tax turnover. So as of now, if we see, as for the last assessment year also, the department through its AI tools is directly, you can say, reconciling the GST turnover as per income tax that we have declared, and the you can say amount of income as per 26 AS. All the reconciliations are being made by the softwares themselves, and CPC issues a notice directly. So make sure you yourself are doing the verifications first, verifying all the amounts, preparing the reconciliations if there are any differences, and make sure you have the evidences for the same. If there are a lot of differences, there are no evidences, let us ensure that we take management representation letters or some sort of evidences from our clients, and then file those income tax returns. One more point that I have come across, now it has reduced to a lot of extent, but usually this thing is observed. What we usually do in our offices is, all of us usually have done this once or twice at least, that whenever we are getting some data at the last moment, and the login that we are trying to log in on the income tax portal for that particular client, we are not able to either log into, or the password has been expired, DSC is not valid, something or some sort of things are there, or the client login is to be created at first. So we enter one of our you can say staffs or partners email address, mobile number, just for that purpose, but we do not have any authority to do so. When there are disputes between the clients and the chartered accountants, the practicing people, there are certain cases in our country, in my city also I have seen certain cases in Pune itself, where FIRs are being filed for such miscommunications, that the chartered accountant never told us that he is using his own mobile number and email address. So these things come up usually when there are issues, when there are disputes between the client and chartered accountants. At the same time, when there are some sort of penalties which come, or which the client is required to pay just because the proper information we have not received from the income tax department so as to take the required action. So we received it late. Why late? Because the email address was entered of the chartered accountant and the staff forgot to check the email address. This also happens. So I'm sure it is a very good thing if none of us over here present have done this, but I think we have heard someone doing this at least. So if we can just pass on this thing. At the same time, usually the DACs, the digital signature certificates of oral clients, are with us, at least for the period of filing, at least during that period, be it GST returns, be it income tax returns. So again, it is a very good practice if we prepare some sort of authorization form. The client is authorizing us to use the DSA to file the return. Even if it is an email authorization, it is fine, because you have something on paper, on email, on a verified source, which you can put before the officer later on if any such cases come forward. That the client never wanted to file the return, but the chartered accountant filed it. So let us have the authorization form also. So every time you file the return, once in a year, you should take the authorization form. This is also one of the good practices which I have learned from few of the senior practicing members. That was one thing. A continuation with this part, even for the smallest of smallest returns that we file, be it the taxable amount or be it the simplified returns that we file, chartered accountants practice not only the tax audit part, not only the disclosures that we make in 3CD, 3CB, but as well as what returns, what kind of assistance we are providing to clients, what is the income tax, you can say form says, and what does the clause by clause 3CD report says. These are also being monitored and reconciled. No doubt the department is nowadays busy with various other issues, so they have not brought this up recently. But if you see few years ago, there used to be so many issues that this is misreported, this is there in the return, this is not being specified in the 3CD, and vice versa. So again, in these cases, if there is some sort of difference, some sort of discrepancy, make sure you are correcting it. If it is not, you can say if you're not able to correct it due to some sort of issues or some sort of communication from the client, make sure you take a representation for it, so that you can place it before later on whenever some situation arises. So moving on to the ITR 3 now. So basically ITR 1, ITR 2, ITR 3 and ITR 4. These are the 4 forms wherein however minor changes, but the changes have come forward for the present assessment year 21-22. But when we talk about ITR 6, 5, 6, 7, there are not many changes. The forms have remained as it is since almost 3-4 years now, irrespective of 1 or 2 minor changes that we have discussed. The rest everything remains the same. Talking about ITR 3, we have seen applicability briefly about ITR 1, ITR 2. Talking about ITR 3, a person who is not individual or HUF cannot file ITR 3. And again, a person who is into business and who is maintaining the books of accounts, receiving business income, is liable to file ITR 3. There are separate schedules. Schedule BS, which is also to be filed. It is for the partners also that is applicable. They have to file it. If our income is exceeding 50 lakh rupees, if the SSE's income is exceeding 50 lakh rupees, compulsory scheduled asset and liabilities. I will tell you my experience. 5 or 6 days ago, I was trying to put in some data for one of my clients in the software, and that software did not pop up to give me a notification saying that schedule AL is still pending. There was no error. I generated the file. When I validated the file in the ITR utility, at that time I realized that yes, AL is missing. So it went out of my mind, and if I would have filed the XML, either it would have not accepted or the error would have been generated, and then again the same process is to be done. So AL schedule assets and liabilities for those SSEs, for those individuals HUF whose income is more than 50 lakh rupees. Then maintaining the books of accounts, again a very important thing in this case is tax audit report, if applicable, is to be filed properly. All the disallowances of ITR form and the clause by clause report are to be matched. Script wise details in case of 112A, 100% details are to be inserted. And also we need to ensure about the high value transactions reporting, 7th proviso to section 139(1). So these are again the same points which I have added in my presentation. So if at all you are just referring to ITR 3 at some point of time, you have all the things just below ITR 3, and you need not look forward in the whole presentation again. So again, these are the you can say high value transactions reporting, changes in details of company, nature of employment, which we have already seen while discussing ITR 1 and 2. Script wise details for resident, non-resident, multiple bank accounts for refund credits, investment schedule. This is what we have seen till now. Moving on to ITR 4. Before that, a quick glimpse of when is the tax audit applicable. So this is what we all are aware of, and we have discussed the increase in limit from 5 crores to 10 crores right today while we were starting the session. So if more than 5 crores audit is applicable, less than 5 crores, but we are meeting the criteria of 5% of total receipts, cash receipts as well as cash payments. If it does not exceed 5% of the respective totals, then you can go for 6% or 8% of the profits. So the 5 crore limit has now been increased to 10 crores. So more than 10 crores, compulsory audit. Less than 10 crores, the condition becomes applicable. Otherwise, in case of companies and other individuals, things are given over here. I will just take a small pause if you wish to go through this particular chart, and then let us move on to applicability of ITR 4, 5, and 6. Okay, so moving forward to ITR 4. ITR 4, Sugam. So ITR 1, 2, 3 we are done with. Let us move on to ITR 4, and then hardly there is anything in ITR 5, 6, and 7. So we'll quickly take this through and move on to the ITR forms also, so that I can just show you the highlighted part as to whatever changes that we have discussed, how do they appear in the form also. So ITR 4, again, individual, HUF, resident firm other than the LLP, and if they are computing the income as per presumptive income sections, that is 44 AD, ADA, AE, and so on. In those cases, they can opt for ITR 4. Again, this is a simpler version. Therefore, if you are any of these conditions were as it is applicable in case of ITR 1 also. So be it assets located outside India, signing authority of any account located outside India, any income received from a source which is outside India, be it apportionment of income with spouse, section 5A, if director in any company or holding any unlisted equity shares. At the same time, if income is exceeding 50 lakh rupees, if owns more than one house property, or there is a brought forward loss under any other head which is to be carried forward, etc. In those cases, in the same manner also, there is one more thing, that is tax deducted at source, which is for the benefit is to be taken by some other SSC, but we have been received with that TDS amount. So in this cases also, ITR 4 is not required to be filed. Before going on to those points, let me just quickly go through this. 1990A, same thing. Agricultural income, same thing. All these clauses were exactly applicable even in case of ITR 1. Next important point over here is ESOPs. So individuals in whose case the payment or the deduction of tax in respect of deferment of ESOPs as per section 80 IAC, if the eligible startup is giving some sort of ESOPs and the criteria which we have discussed is applicable in those cases, you cannot file ITR 1, you cannot file ITR 4. You need to go for 2 and 3 with additional disclosures, and even we need to enter the amount of tax that we are deferring. Before going to ITR 5, few small, you can say points, few important points, but they are not that, you can say big points to discuss. For ITR 4, basically when we see 44 AD or 44 ADA, we see 6%, 8%, 50%. Dear members, it is minimum 8%, minimum 6%, minimum 50%. The clients are more aware than us nowadays. Be it the WhatsApp University, Google University, YouTube University, whatsoever. They come and they tell us that yes, we have a profit of 20%, but please show only profit of 6% or 8%. There have been cases where there is a suspicion by the department, by the officers, that it is not 6%. They do compare it with the industry standards also. I'll be discussing few of those question points in the slides to follow, but they are keeping a, you can say, keeping an eye on it. So if you are actually receiving income of 6%, if your client is actually receiving an income of 6%, 8%, 50%, fine, we can show it. But if it is more than that, let us practice our duty and encourage them and make them understand that the consequences can be not that good for us, and we may end up paying some penalties, etc. No doubt this is a very rare situation, but the rare situation is going to become frequent as expected in the future, in the upcoming years. So if it is 14%, all the receipts and payments account are available with us as 14%, then let us encourage our client to pay tax at the rate of 14% of profit. Because the income tax department, if there is a suspicion, is no doubt sending notices asking for information to present whatsoever amount of information you have to prove that it is 6% and not what the income tax department is telling us. So receipt and payment account are required in case of scrutinies, if scrutinies are followed. Again, number 3, capital account, debtors account, creditors account, and stock. These are no doubt need to be maintained and need to be entered in the business particulars of the ITR 4 form. At the same time, if there is any turnover mismatch as far as GST turnover is concerned and your income tax turnover, which you are trying to declare over here for any of your clients, if it is mismatch, make sure reconciliation is available and proper explanation is available, because we never know when they will send us an email, send us a notice, and we'll have to reply for it. This usually happens when we have some, you can say, very simple returns. We just go through and our articles or our staff usually file those returns, usually work on those returns, and there is literally nothing into it. Just the closing balances to be carried forward, 1 or 2 transactions happening, couple of transactions, the profit, there is no such profit as it is. We are filing the return and we are putting in the amounts. Let us make sure that we go through the capital account specifically. No doubt it may be a clerical error, nothing intentional as far as closing capital and the carry forward amount of opening capital is concerned. But there are some clerical mistakes which are observed when it comes to opening and closing capital. And because of which, again, there is a, you can say, process which is to be followed. Again, revise the return, again, enter the details, that too when we receive the notice, etc. So let us ensure that those amounts are entered correctly. If there is any income outside India, that is also to be added. Passport details apart from it, not required. 7th Proviso 139(1) as it is applicable. In case of goods carriages 44A, in that case, the columns of goods carriage details have been restored again since the last assessment year only. Nothing new as of now. It was introduced in the last assessment year itself. So earlier, we long back, 5-6 years back, we did have the columns wherein we were required to enter the goods storage details properly, goods carriage details. It was removed later on. Now it has been restored back. And finally, the last part, which I have already discussed, capital, debtors, creditors, stock, cash, bank. Many a times our client sends us a letter or writes on a WhatsApp message, writes on email and says that this is the bank account number or name, this is the branch, this is the amount of balance that is there into it, say 5,000 rupees. And the actual bank statement appears to be, say, 5 lakh rupees. No doubt there is no intention behind it, but you need to report the balances correctly. Because everything is linked nowadays. We never know when 26 AS will show the bank account details, including the balances in front of that. So again, that will be reconciled by the department. So that was about ITR 4 specifically. These are again the same things which we have discussed till now, be it the tenant details, be it the employer details, etc. All this we have seen. Multiple bank accounts for refund. This was the carriage notification. It had come in 2020, wherein the details are to be added as per section 44 AE. And lastly, the summary of cash and bank account reporting column. That is again separately added. Moving ahead, let us talk about ITR 5. Not much to discuss over here. ITR 5, 6, and 7 forms have remained as it is same in the last assessment year also, in the current assessment year also. So individual HUF company and person filing ITR 7, charitable organizations, trusts, etc., local bodies, they are not allowed to file ITR 5. However, AOP, BOI, firm, etc., these people can easily allow to. 7th Proviso 139(1) has to be, you can say, taken care of. And one more important thing over here, again, script-wise details are to be entered. TDS provisions are to be followed compulsorily. So that is a part which has to be taken care in this case. Next, moving on to ITR 6. So again, in case of ITR 6, if you're opting for the alternative tax regime, 115 BAA, 115 BAB, manufacturing companies, etc., the new rates that were applicable, you need to ensure you are exercising the option, filing the declaration under Form 10IC and 10ID, and only after that you are going to ITR 6 and filing the return. In the same manner as we did for ITR 1 and 2, where it was 10IE and 10IF for cooperative societies and for individual HUF, under 115 BAC and BAD. In the same manner, this is applicable over here, right? So again, multiple accounts for refund, 112A, 115D, all those things are applicable. Companies can file ITR 6. So again, the same matter. So let us go on to ITR 7, 139 4A, 4B, 4C, 4D. All the people over here, including 25 section 8 companies, etc., are required to furnish this return. Registration under section 12 is compulsory, and change in registration details. So many trusts, or you can say many such kind of entities, went on to renew their registration or take new registrations. Make sure all those recent details are added in ITR 7. list of ETG. Form 10B is to be filed before filing the ITR. Again, there is a question over there. Have you filed it? And the date of filing is to be entered right now. So that is also there. At the same time, when a trust is filing the return, or when under ATG, ATGGA, all those sections, the donee is taking the deduction. The donee has to now make sure that along with the donation, he or she has to give the details of his or her PAN to the organization, to the trust also. If the trust does not submit the same, then that individual SSE or the donee will not be able to take the benefit of those deductions. So that is an additional thing which has been added over here. So which I thought of discussing. One last point before moving on to the ITR forms is that the following things we need to note. These people can file ITR 7 for filing their income, even though they do not have their income to be taxed, or they do not have any taxable income. The income which they generated unconditionally exempt. Still, these people can directly file ITR 7 for a purpose of disclosures, for a purpose of compliances, or for the purpose of reporting, etc. So be it local authorities under 1020, any other sort of non-public funds, etc., armed forces fund, etc., LIC, any body or authority. Then be it the SARC fund, IRDA fund, Clean Ganga fund, any prime minister's fund, etc. All these can be, you can say they can file ITR 7. Gratuity fund, approved superannuation funds, etc. Next, one more thing, charitable company incorporated under Section 25 of Companies Act or under Section 8 of Companies Act 2013 will be required to file ITR 7 for the purpose of their disclosures and their taxes. This was the point which I had just discussed, that from the financial year 2021, trusts who have opted for registration under ATG will have to obtain and provide the department the details of the donee also. That is the PAN, amount, date, address, whatsoever things are possible. If you as a donee are taking the benefit under Section ATG, it is not only important that you take a proper receipt from the trust, from the charitable trust, or you take their PAN number. It is also important that you are giving your PAN number also to them, so that they are submitting it to the department in their respective format. Because without reconciling both, you won't be able to take the benefit. Be the amount is as small as 500 rupees, 1000 rupees, 1500 rupees, 2000 rupees. Still, that is to be taken. So that was one important point over here. And we have also discussed Form 10B. The chartered accountant who is auditing the trust financial statements is required to ensure that he is submitting, filing 10B before claiming the deduction of expenditure and ITR 7. Only then he should proceed ahead and go for it. As I told you, as I have already discussed, in case of ITR 4, when we are filing ITR 4, one of the question points is minimum percentage of profit that is to be shown. So if it is 14%, please try to encourage your client to show it 14%. Let us do our duty so that there are more compliances and there are very less notices coming, because our client will only end up in trouble. If it is 50% and we are showing 6%, as per the industry standards, if each and every of the SSE in this business is earning 50%, how are we earning 6%? So again, these are some triggering points which may trigger scrutiny later on. How partial it is, it may trigger. So that is one thing. There was one rate 45% which was introduced in the last assessment year. So that is also being added, and we can consider that. Now the point of scrutiny which I was trying to discuss over here. The point of scrutiny which I was trying to discuss with all of you a few minutes ago. Let me just try to cover that point in a very brief, and then maybe I'll go on to towards the end of our session today. As far as ITR 3, 5, and 6 are concerned, it is even applicable in case of ITR 4 also. We have experienced so many issues. All of you present over here may have received 1 or 2 notices for your 1 or 2 clients. And you may be shocked, how are they aware that 14% should be the rate, 15% should be the profit rate, etc. And we have showed the income lower than that just because we are allowed to. So all these sort of suspicious transactions, how do they know that these are suspicious transactions? They are ready with the ratios, industry ratios. What should be the ideal gross profit to sales ratio for this sort of business entity or for this sort of business code? Be it other income to sales ratio, be it debtors to sales ratio, or whatsoever. They are completely in control of this. They have summarized each and everything for each and every assessment year. with the department. They have summarized each and everything. It is not they have summarized. The software is prepared in such a way now. The backend is so strong with all the RPA AI tools, so that each and every of this thing for each and every industry, each and every sector domain comes into picture just at one click. The officer has to just compare. That comparison too is taken care by the softwares. They can issue notices also, provided there is a check by the officer that yes, actually there is a need of notice in this case. Let us open the scrutiny. So be it your purchase ratios, be it your capital ratio, any other transactions. So when we are filing these returns, ITR 3, 5, and 6, let us ensure that we are, no doubt, we are aware, our client is aware about the actual situation, the genuine situation. Let us try to somewhere compare it with the industry standards also. हम कितना दिखा रहे हैं, कितना लोग दिखा रहे हैं, generally कितना चल रहा है, and let us ensure all the ratios are properly reported. There is least of manipulation involved, and whatever sort of things you are showing over there, you have reconciliations for each and everything. If you have some sort of ratio which is very much less, even when compared with your own ratio for the previous assessment year or for the previous financial year, make sure you have some sort of explanation available. Maybe it is due to the COVID that the sales have gone, you can say down, or maybe rised up in case of essential products, pharmaceuticals, etc. whatsoever. So these are transactions are usually taken care of, and the ratios are considered by the department. So as I told you, point number B, department is very cautious. They are summarizing each and every industry standards and comparing it with your date of incorporation कि 5 साल में इसका इतना होना चाहिए, तो इसका मतलब इसका इतना हुआ है तो 2-3 साल में इसका इतना तो होना चाहिए. So they do have a comparison base available with them. And gone are those days where there was a specific partial scrutiny, some specific scrutiny, etc. Nowadays, if you have seen, there is a 100% scrutiny notice, and you are required to submit each and everything to them. If you do not have reconciliations, you have to sit down then and do the reconciliations, which is obviously very difficult. We all have experienced it. So let us try to make sure we do have all the reconciliations available with us. With this, I have ended my part of ITR forms that we were supposed to discuss today. Before moving ahead to the overview of forms, let me take you through. I'll not discuss in details because many of us are already aware. It is given over here in the presentation also. You can no doubt check it out later on also. Let us discuss about specific financial transactions. Some sort of SFTs. What is existing right now and what is supposed to get added in years to come, so that we do ensure that we go through each and every of these details for our clients and make sure we are reporting things properly, make sure we are giving them advices properly, so that they do not end up in any such trouble later on, where they're required to present so and so documentations, reconcile all the issues. So as of now, if you see cash deposit more than 10 lakhs in saving bank account, you have to report SFT compulsorily. Cash withdrawals more than 50 lakh, we have to report it. Cash payments more than 10 lakhs, we have to report it. Cash received for goods or services from our customers more than 2 lakh, we are reporting right now. Mutual fund investment more than 10 lakh or shares buyback from a person more than 10 lakh, again SFT is applicable. In the existing only things, we can see credit card payment more than 10 lakhs in a year, or credit card bill which is paid in cash for more than 1 lakhs. Purchase of immovable property, purchase of shares, foreign currency, etc. These are there. There is compulsory filing of return. You can call it as so-called extended scope of SFT. A person having transactions over rupees 30 lakhs in cash, then payment of rent over rupees 40,000 per month. Even this is included. All business and professionals having turnover of 50 lakhs. This too we all are aware about because the schedules have been made applicable accordingly in the ITR forms. But I guess the other provisions we need to take care of. We need to consider them. Next, moving on to, these are the proposed things. These were actually proposed 2 years ago. Few of them have got implemented, few of them are yet to be implemented. So we need to still take care of these things. Be it the payment of educational fees or donations, if it is more than 1 lakhs, we need to advise our clients to keep documentation of all these things. At least where SFTs are applicable, let us advise our clients to keep a separate file, a separate note, or let us even ask them to submit us and let us keep a copy of it. So as to whenever we receive a notice, let us quickly go through and reply it to them. Many a times it also happens like when we are asking for certain documents to our clients or asking for certain amounts, he says that no, I am traveling somewhere, मेरे पास ये document नहीं है, आप amount बोलो मुझे याद है मैं बताता हूँ. So these things happen, or we are bound to do these things if we receive information lately, or we are filing the returns at the end moment. So let us try to prepare an Excel sheet of details along with some sort of Google Drive folder wherein we can ask them to at least scan and upload the documents over there. Many of our clients are able to do this right now, or their staffs are able to scan it and send it to us right now. So let us personally go through the document. LIC premium hai, kitna hai, kya hai, tuition fees hai, taking ETC deductions, because all these can end up at least a small trouble to the client later on. और वो trouble हमारे ऊपर ही आने वाला है. We have to file the returns, we have to guide him, etc. No doubt we'll be getting fees for it, but still we all are aware about how troublesome it can become in some cases. So again, this was one important point. So be it payment to hotels, life insurance premium, property tax ka payment ho gaya if it is more than 20,000, etc. And if the property tax, many times what happens, the person is paying property tax, but those many properties are not disclosed. Again, there is a reconciliation. So why is this kind of situation happening? So before department tells us that this is happening, let us ask our client, make him aware, and let us make the changes, declarations, disclosures, reportings accordingly. If it is an audit case, obviously we are doing that. But even if it is a non-audit case, let us try to develop a small habit to put all those things into picture. Some of the further things, the next slide, electricity consumption, that is already there right now. Deposits or credits in current account, domestic business, air travel, etc. Deposits in non-current account, 25 lakh rupees, demat account deposits, etc. Or be it the bank lockers. So all those things have come into picture. So maybe in the next 1 or 2 years, we will experience some sort of issues because of this. So if we are planning it right from today, and if you're advising our clients right from today, whatever sort of amendments are there in the further assessment years to come in the income tax forms, we'll be able to write all the things properly. We'll be able to disclose each and everything properly. So with this, I would end the presentation. If you all allow me to go on to the ITR forms, let me quickly then show you the forms within 5-7 minutes. And then maybe we can stop, or we can go for the Q&A session if there are any. Let me just open the ITR forms so that we can just, whatever changes we have seen, we'll just quickly go through them. Just a second. Okay. Is the form visible?
Yes.
Okay. Just a second. Yes. So as we can see, I have opened the ITR 1 right now, the notified form in the Gazette. I'll just zoom it a bit over here. Those changes that we have seen: income deferred in case of income tax deferred in case of ESOPs, and if TDS has been deducted under section 194N, that is also included. This particular point has been entered over here. Then if you see, if you are opting for alternative tax regime, there is a specific question entered. Are you opting for a new tax regime under section 115 BAC? Yes or no? Along with that, this particular clause, which was there even in the last assessment year, that is 7th proviso to section 139(1). If it is yes, then we have to further, you can say, put in these check boxes. At the same time, we have to put in the amounts also. Not much change apart from this when we talk about ITR 1. Rest of the things are exactly the same as we had in the last year. Let me go on to ITR 2. See, again, the same part, that is, are you opting for a new tax regime under 115 BAC? Yes or no? Check boxes are given. If you see over here in the E part, I'll just zoom it a bit. In case of individuals, if it is a resident, were you in India for 182 days or more, the section 6 conditions are given over here and we need to put in properly. If non-resident, please specify the jurisdiction of residence, and if possible, get the tax declaration also, or the taxpayer's identification number of that particular country or of that particular residence unit. And same thing is for HUF also over here. Again, apart from this, not many changes are there. This was the type of company part which I had told you. So if we are a director and if the SSE is a director and we are marking for it, the type of company part has been there and you need to put in. This was removed in the earlier, but now it has been again added. Then moving on to the further pages. Yes, see, ITR 1 did not have the co-ownership part. ITR 2 has the co-ownership part. So if there is any house property which is jointly acquired, details can be added over here. Going forward, I guess, one second, there was a change over here. Yes, this was the schedule which I was talking about. So softwares do give an option to import and export all the transactions right from Excel. You can do all the calculations in Excel. You can set them up, structurize it, and you can upload it over here. Even utility allows the same. So this is for 112A in case of residence, you can say, and you have to put all the details over here, script-wise details. And in the same manner, 115AD is also there for non-residents. So both these options are there. Then yes, in case of other sources, now since dividend has become taxable out of DDT, so this was that point which I had mentioned. So you have to give quarterly breakup just for the sense, so that 234C ka penalty is easily calculated by the department for the advanced tax purposes. So up to 15 June to 15 September, 15 September to 15th December, then December to March, and then last 15 days of March. So we need to enter each and everything properly over here, the detailed breakup. Only after that we'll be able to proceed ahead. We were talking about ATGGA. In case of ATGGA, as I told you, see before this also I'll just show it to you. In case of ATG also, donation in cash, donation in other mode, and total donation. So basically the modes are bifurcated. In case of ATGGA, not only modes are bifurcated, date of donation in cash is also required. So date donation in cash, donation in other mode. In case of cash, we have to write down the date of donation and then we have to proceed. So each and every donation that you have made on each and every date is to be specified over here by inserting various sort of rows accordingly. So I think so ITR 2 has these many changes that we have discussed. This was the schedule AL, which we have discussed that we need to ensure we are putting it. There are still some softwares which do not show us the error for the same. Next one was part B, TTI, surcharge. This did not exist earlier. This has been introduced from this year. Surcharge computed before the marginal relief and surcharge after the marginal relief. So this is again that is something that is to be taken care of. And I think with this has been added. You can say the form ends over here. Yes, one small thing, one small point relating to 194N. You cannot carry forward it to next year. You have to claim it in this year, 194, and accordingly the things are given over here. You have to claim it in this year and you have to either claim or you can apply for a refund. So majority of the changes that will appear in the further forms also, I have already discussed over here, like residential status we have seen. This is ITR 3. So residential status 115 BAC. I don't think so. Again, we should go one by one over there. This was one point. Date of furnishing the audit report. See, earlier we only had the option, are you liable for audit under 94E? This one that was applicable. If yes, have you submitted the audit report? Yes, then check out the box, or no, check out the box accordingly. But right now you have to put in the date of furnishing the report also. So that is added over here. This is point that we have seen. So I just thought I'll just discuss about it over here. These are the normal schedules only. There is no change in these schedules. Property co-ownership we have seen already. Just a second. These were the scripts. Same thing we have seen in ITR 2 also. Same thing is applicable over here. Yes, you can see one small point which I thought I forgot to discuss while going through the ITR 2 form. The fair value as per you can say of the units on 31st of January 2018, and the cost of acquisition accordingly, which we used to earlier calculate, but there was no such specific column to be inserted. I had discussed while going through my presentation that this has been added. So this is that column which we are able to see. So this fair market value, cost of acquisition, these columns have been introduced over here. So you have to enter the amounts and accordingly the calculations will be made. Same thing is for 115 AD also. The other source income dividend part, again, as you can see over here, quarterly breakup is required. The marginal relief ka part is required. Yes, this is one small change in case of ITR 3. Again, we have discussed unabsorbed depreciation. So if you have any such depreciation and you're opting for the new scheme, you will lose all this depreciation, but you can definitely make the adjustment as per rule number 5 and add the amount back as far as it is eligible to the opening WDV. So that thing is given over here. Same thing is given in case of, you can say in other forms also. ATG, GGA, we have seen date of donation in cash. So that part is also clear. 194N, which we have seen just now in the last form. Let me quickly take you through ITR 4. let me quickly take you through ITR 4. Yes, so again, ITR 4, the first major point, if the income tax is deferred due to ESOP, ESOPs, you cannot go for ITR 4. The same thing we have seen in ITR 1 also. 115 BAC is over here. Moving on to the next slide. Everything exactly the same. No other changes are there in this particular form also. This was the 44 AE, details of carriages, which was not required earlier, but from the last point, from the last time, it has been last assessment, it has been included, it has been restored. So these are those points which we need to take care of and enter in if we are filing for 44 AE. ITR 5 and 6 and 7, I don't think so there are many changes, one or two couple of changes which we have discussed, and that is what is in the form. No other changes are there in the form. As you can see, I have not highlighted any part over here till now. No doubt 115 AD and 112A are there, but that we have already seen, so we have to consider that. Nothing other apart from that. Yes, ATP, this was one thing which we have not seen in the written form. So ITR fee, ITR 5, when you are entering the deductions under section ATP, make sure you are entering the nature of business codes. This column did not exist earlier. Earlier it was just income and the amount that is eligible. Now we need to enter the nature of business code also. So it is just now that it has been introduced. It was not there earlier. So that is one point which we need to keep in mind. Apart from this, everything remains the same. The unabsorbed depreciation part, etc., we have seen. ITR 6, I don't think so. I should again open it and go on because there is no such changes. Let us just quickly go through. If I have highlighted something, I'll just show it to you. Now, I think again, the amendments that we have seen, it is somewhere the same. ATM section has been introduced under chapter 6A, which we have seen for redistribution of dividends. So if you are receiving dividends, as the section we have seen, ATM, if you are receiving the dividends and from a domestic company or any business fund, etc., and we are redistributing it to our shareholders, then we can take deduction under section ATM if we are allowed to. So that ATM was there over here. Apart from it, everything remains the same. So dear members, with this, I would like to complete my presentation. I would like to stop over here. If there are any queries, let me quickly go through the chat box. I think I am able to see a couple of things. Before that, I think so I have covered most of the topics relating to the current changes. As far as the applicability is concerned, as far as the recent changes in last 1 or 2 assessment years are concerned, those points also we have covered for our better reference and reconsideration while filing the income tax returns of our clients. So I think so this may benefit you. I'll be solving the queries if I'm able to, whatever queries are given over here, whatever I'm able to see. If you have any other queries, please do add it. I have also given my email address to the branch. So if you have any further queries, maybe after going through the presentation, you can definitely reach out to me. How to file rectification in the new portal? Vishalji, frankly speaking, I have not tried even once. So as of now, maybe if some member over here have tried, if they can just share their experience.
I think
Otherwise,
option is not available. Even though I asked, I didn't find the option to file the rectifier. I don't know whether anyone has done it.
Vishalji. Vishalji, let me go through it because I haven't personally yet tried it in the new portal. Let me go through it. If I do find some input for it, I'll surely share it with you. One 143(1)A adjustment query. Okay. Ravi ji, can you please explain in detail or mention what exactly that serial number 23 you are trying to say? Because I did not get your query. Mukesh ji, just a second, I'm reading your query. 194N. So if we are able to claim the, you can say we are able to take the credit of 194N, the TDS that has been deducted, we have to take it. If there is any excess amount left, make sure you are claiming the refund. If you do not claim the refund, the amount will lapse. You won't be able to claim it in the next year, nor you will be able to carry it forward for further years. So if there is excess amount, do make sure we are claiming it as refund. Otherwise, that amount will be lapsed. Yes, Chandrasekhar ji, I guess you have raised your hand. Okay. Yes, Trishank ji. Yes, you will have to get the tax audit done. Sunil, sir, are you there online? Shanji, yes, you will have to provide the script-wise details over there. No doubt if there is no such income arising out of it. So therefore, there will be no tax, but you will need to provide the script-wise details. If possible, if you provide it, there will be no further such requirement from the side of the department. But if we avoid providing it and it is connected somewhere and it appears to the department, we may receive a notice and we'll have to additionally provide it. No doubt there are chances very rare to receive such a notice since there is no arising capital gain or loss from it. But if possible, let us, if there is no such, you can say loss by providing it, let us provide it.
Hello, sir. I am Chandrasekhar.
Yes, sir.
Actually, I was surprised why my chats are not visible to you.
Sir, I have not received your single chat.
No, in fact, I am my earlier chats were sent, but last few chats could not even be sent to. But
Okay,
anyway,
okay.
I will precise my queries.
Yes, sir,
One thing
please.
is, Form 10E need not be filed for ITR 1 and 2.
Yes, yes.
Form 10IE need not be filed
Only
for
in case
ITR
if you are
1.
having business income, then we need to file it and mention the
And
details.
another thing was that you mentioned that ATP in ITR 5. ITR 5 is for firms, no, and ATP pertains to cooperative society. Then how would it be there in the ITR 5?
No, 1 second, sir. I think there is some miscommunication. Maybe you might have seen something in the presentation. I'll just quickly go through it and let me come on to that point.
Okay.
Yes, sir. Yes, sir. Sir, any other query that you have, maybe, so that
No.
we can discuss? Okay,
No,
okay, okay.
that's all. That's all.
Okay, 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 sir. I can see one more query over here. Adjustment response to 143(1)(a). Okay, I think so. In that case, the same thing has happened with me, but a couple of years ago. So we had tried to write down a letter to the respective department officer, a respective jurisdiction officer. Maybe that would help if it is stuck somewhere. So we can just get it. You can say push it and get it proceeded ahead. So that can be one situation. However, let us explore other options also. But I think that can be one direct option which you can directly try to get in touch with and do it right now.
Just one more question came to me,
Yes,
sir.
sir. Yes, sir.
Sorry to interrupt.
Yes, sir,
Having file written under old regime, can I revise my return to go to the new regime?
No, sir. As far as I am aware, we are not able to do so. If we are once selecting that, then we won't be able to revise it. However, for some clerical changes or some errors, sort of such things, we can revise the return in those cases. But as far as changing it from one regime to another, I am doubtful about it because I haven't heard. And even while trying, you can see that it won't accept it.
And if the return is not e-verified, then?
No, even in that case, you won't be able to do it because we have uploaded the return already.
So no choice for going to.
No, sir. No, sir. So basically, before filing the return or before submitting it itself, we'll need to make sure that what regime we are selecting, and accordingly we can opt for it.
Even in respect of ITR 1, 2.
Yes, sir. Yes, sir. As far as I am aware right now.
Hello.
Yes, sir. Yes, sir. So, sir, we won't be able to do that.
So only next year we can go to the new regime, no?
Yes, sir. Yes, sir. There is no other option.
Okay.
However, if there is any extreme case, we may try to approach the department, but I doubt that there will be any solution for it.
Okay.
Yes, sir. Yes, sir.
Thank you.
Sunil ji or anyone from the Ahmedabad branch, if they are there online. Yeah. I think I'm done with the set of. Yes, Vishal sir.
Thank you, Karan ji. Thanks a lot from the branch and all the members present over here. Very precise presentation. I would be precise with 1 hour 48 minutes, and you have also got all the queries. So we are very thankful. The way you have the emerging of the income tax portal to in the beginning you have just taken, and that you have ended with the what are the changes in the ITR forms. And the most key point I would like to conclude over here, that is the managerial representation and the authority letter of DSC is must. Is must. We are taking it very lightly. हो जाएगा बाद में ले लेंगे, जब दिक्कत होगी तब ले लेंगे, पुरानी डेट में डाल के ले
Correct,
लेंगे. That mindset has to be changed. And one opportunity I also say, we can increase our audit fees, that we have given the ratios we can take of industry. We can give that homework to the accountant.
Correct,
We
correct.
find out the ratios, then we'll say, we'll discuss with the management that we are giving something extra. That will add
Perfect,
to
perfect.
that
And that
will
is
add
one of the
our
important
service.
points.
Yeah. Okay, if you won't go with that, scrutiny will come. So I think this thing we can add in our practice also. And one thing you said, we have to file the form 10A. I would conclude that all the forms should be filed prior to the filing of the income tax return.
Income tax return, as simple as
Otherwise,
that.
it would be considered as defective. So
Correct.
thanks a lot for a very simple and beautiful presentation, Karanji. Thank
So
you.
just
Thank
one
you
thing
very
I
much.
would like to add, the presentation has been shared with the branch. So if those can be shared with the members, even my email address and details are there into it. So if you have any query, or
Definitely.
if I'm not able to respond to one or two queries over here that I have just mentioned about, so you can definitely get in touch with me.
Definitely, we'll share it with all the members, and they will come back to you if they have any queries. Thank you. Thank you for your support, Karanji.
Thank you, sir. Thank you, all the members. Thank you, Sunil, sir, and the Ahmedabad branch. Thank you.
Thank you very much. Thank you.